Khush Pora and Parag Thakkar are joining in, our dream team every Monday to give you the tech and funda view. Khush, you seem to have had a great weekend. So, and I know you're going to start with a recap of that. Good enough to be bullish at the start of the Navratras?
Oh yeah, good times.
Yeah, good times, definitely.
Yeah, I mean, we were there at the launch party of NDTV Good Times. Fabulous event. Absolutely loved it. But from good times to great. Happy Navratri, guys. We're kickstarting the Navratri festival. Just a quick question. Any one of you into Garba, Dandiya? Two left feet?
No, not me.
No?
Not me. I clap from the sidelines.
Yeah, and I enjoy the music. It's very good music.
Oh, it is, right? But I think markets are going to be dancing to, their own tunes. Trump tantrums on one hand and the Indian resilience and reforms on the other. Today, I've got more positives than negatives from a technical standpoint, right? So let me just list out a couple of positives from the technical perspective. There is a breakout zone, a very strong one, at the 25,550 and 25,650 level from where the markets retraced this week after 3 weeks of gains, on Friday in particular. So you've got, from a weekly setup, the cup and the handle formation breakout that is coming up, falling trendline resistance that is coming up, and also there's a gap. And as I said, all of this revolves close to that 25,550, 25,650 levels, maybe if I can push it to about 700. Once that is taken out, you could be looking at a zoom to about 26,000, 26,400 kind of levels, which would essentially mean new highs in the coming weeks, coming months' time. There will be a time for caution, and I will be here to give you a heads up around that as well, but that's not today. As far as today's opportunity goes, I think you should be looking at buying on dips. Remember, Friday also we spoke that markets have had a good run around 25,200, give or take 50 points. So you should be looking at adding longs. So this is the dip that we did speak of. Positional stop around the 25,000 mark. Go long from these levels again for levels of 25,600, and once that resistance is taken out, perhaps 26,000 as well.
Got it. Okay, let's talk about your individual stocks this morning, because are those the opportunities to buy on dips, if at all, or are they going to likely start with strength?
No, the ones that I have on my list most likely will not see the kind of cut that the market or the GIFT Nifty suggesting, not related to IT per se. But since it's Monday and we discuss weekly picks on Monday, well, let me start with that. For this week, the weekly pick is Sequent Scientific. Very interesting moves. 3 sessions of gains, 1 week, 3 weeks of gains rather. 1 week mild dip, but on the whole it was a consolidation week. Last week we've had a good run on the back of good volumes. The retracement also was close to that 38% mark, and the stock rebounded from there. All in all, on the cusp of a breakout, and the momentum and the volume suggest that that could well happen. 210, 220 are your targets on the upside. 190 is where you place that stop loss. The second one has to be from the banking and the financial space, right? PSU banks did very well, top performing index for the week. On the way up, Canara Bank for targets of very near-term targets of 120 and 123 with a stop loss around the 115 mark. A quick word on Axis Cades. Last week's weekly pick, where our second target was 1750, the stock hit a high of 1740, close to a 9.5% gain in 3 to 4 sessions. So I think that's a good move. You could perhaps take money off the table and look to re-enter at lower levels.
Okay, so interesting ideas. Parag bhai, we'll come to you in just a bit, because we have to ask you about IT stocks, of course. But there are a few ideas that will come through from a regular segment on the show. This is all the chatter from the dealing room. Amit Sarkar joining us this morning. Amit, I'm most curious about what you're hearing on IT stocks, because I'm sure there's a lot of number crunching that's already gone on.
Well, when it comes to IT stocks, what dealers are indicating is that for large caps, we could see a 1 to 2% out card, and for mid caps around 3 to 4%. And if any stock is falling more than 5%, then it will be a buy on dips, is what the strategy, what dealers are indicating when it comes to IT. But apart from that, multiple other stocks that remain in focus. Firstly, it's Bank of Baroda. There are buy flows on DI desk. Dealers are expecting strong growth numbers, strong loan growth numbers, specifically in the second quarter of FY26. In fact, they're indicating that the growth number that Bank of Baroda could post on a sequential basis could be higher than private banks as well. When it comes to Glenmark Pharma, there are sell flows on large HNI desks. Dealers are indicating some negative news flow could come in regarding one of its plant in the United States. For Laurus Labs, there are buy flows on large HNI desks. Stock is gaining on anticipation of a large order win. For PNB Housing, there are buy flows on institutional desk is what dealers are indicating. They're expecting the new CEO announcement to come in very soon. They're expecting an external guy from private sector to be appointed. So keep an eye out for PNB Housing as well. And for IIFL Finance, smart investors and PMS have started accumulating this counter. Dealers are indicating a 20-25% return over the next couple of months. One of the rationales given is the fact that the street is not still factoring in the growth that IIFL Finance could see when it comes to the gold lending business. When it comes to John Cockrell, the stock has been buzzing on of late, and this is on the back of a potential order win announcement that could come in. And lastly, when we talk about Paytm, we had seen a sudden fall in the share prices on Friday. Now, what dealers indicated on Friday was the fact that there was some commentary that had come in on the Morgan Stanley conference, which was taken negatively by the street. So that could be one of the reasons. And the second reason, what dealers pointed out, is that SEF partners are looking to completely exit from Paytm. So probably something around that block or some of that stake might have been offloaded in the market is what dealers are indicating, which could have led to this sudden fall in the share prices of Paytm on Friday.
Sumit, naam bhi bata do. I'm sure you have the name of the PNB guy as well. but I'll be fair. I mean, you know, it is good journalism, by the way, which makes him ensure that he's not mentioning things which are not confirmed. So a great practice. But Sumit,
all of this comes with disclaimers that this is nothing that we have confirmed journalistically. I just want to put that out there. This is what we are hearing from dealer rooms. We have not gone out and confirmed these stories. We are not ratifying these stories. We're not saying that this is happening. This is the buzz. So just want to make that very clear.
Great stuff, Sumit, and good journalism, by the way. Great stuff. Thank you, Sumit, for that. Parag bhai, come in on the big debate this morning, right? We've spoken to CP Gurnani, who said, you know, that it will not be an issue. Dealers are indicating dips could be bought into as well. Kush is of that opinion. But I'm talking about IT. You have a favored position in tech. Does this hit that thesis, or are you still constructive?
So basically, luckily what happened is that after GST cut, I got more bullish on domestic themes, and so I bought into PSU banks and financials and City Union Bank as we spoke. Then of course this Vodafone episode triggered buying in Indus Tower. So the overall weight of the IT is a little less now than we spoke last time. But I would say that yes, basically it looks like that it's a temporary fall, and which should be bought into. And specifically, some of the names which I am also hearing are not affected, are Tech Mahindra, Coforge kind of names, which are not affected by this visa thing. So if they fall, say more than 3 to 4%, definitely I would also look to buy.
If I remember correctly, you had liked Wipro when we had spoken the last time. So therefore, speak about the larger IT companies. And
so I think it depends on company to company also. But generally, in my view, more than 2.5%, 3% fall can be, one can start gradually accumulating, because things are not very clear as of now. But definitely the dependence on H1B visa has reduced significantly. So 15 to 50 bips margin decline can be anticipated.
If there is a dip, will you buy today?
Yeah, definitely. I am looking to buy Tech Mahindra kind of name, where I am hearing that there is no big, there is no impact at all. Or say Tech-M, yeah.
Okay.
And incidentally, you had Mr. Gurnani only.
Yeah. No, I mean, he's former Tech-M now.
Yeah,
but,
correct.
he was talking about what the direction has been for a while.
Yeah.
And
but of course, my tilt still remains towards financials, especially PSU banks, because from Q2 perspective, as Sumit also highlighted, for example, BOB, one can expect a good growth. In PNB, I think in one of the channel, the chairman said that there will be no margin contraction at all in Q2, while all other banks will have margin contraction in Q2. So I have wanted to say, of course, with the disclaimer, I am saying, please take help of your financial advisor, and it is for long term only. But so we have what, apart from SBI, which we had as a big position, we have added to PNB, Canara, and BOB in our portfolios.
Okay, we have done this segment this morning, and after Prime Minister's call yesterday for Swadeshi and by Swadeshi, we thought we'll put together a list of Swadeshi stocks as well. And in fact, we have those graphics, if we can pull them up. I want to ask both of you, what do you think are the best Swadeshi bets? And it ties in well, Parag Bhai, with what you just said about domestic facing. If that's really going to be a movement, and it's the need of the hour, because it's not just the trade war, we're in a world where every nation needs to look out for themselves. What would be your top Swadeshi stocks?
So Swadeshi picks, I would say that, see, in steel, for example, we have JSW Steel. In cement, we have bought recently into Ambuja Cement. In FMCG, we have Dabur Marico kind of names in our portfolio. So, and as such as PSU banks, as I told you. And of course, needless to say that this Vodafone Idea thing, government changing up stance towards slightly positive stance, that they want to reduce the burden of Vodafone Idea and they want to keep it alive and kicking. I think that augurs well for Indus Tower also. Indus Tower is a only 96,000 crore market cap company with 14,000 crore cash profit.
But very quickly those...
Vodafone, sorry, Vodafone can actually now be a Swadeshi stock because the parent has left.
And 49% is owned by government, right?
And 49% is owned by
You're
government.
not worried about the, the plans for capex abroad for Indus Tower? It's
No,
not
that is
worrying you
in
at all?
fact positive, right?
It's
Because
positive.
that will provide growth also.
Sure.
And plus, remember one thing, Indus Tower trades at only 6 times EV/EBITDA, versus American Tower which trades at 20 times EV/EBITDA. This much discount, I am not seeing any sector in India which is trading at such cheap valuations compared to global peers. In India, everything is premised on that India, the growth will be higher, so PE multiples are higher. Here, the multiples are lower because of that Vodafone fear, because 30 to 35% of revenue comes from Vodafone.
So
but if
positive
Vodafone is, if government is tilting positively towards Vodafone, I think Indus Tower can be a great opportunity.
Very quickly, Swadeshi stocks.
Financials and auto, Samman Capital, LTF from the NBFC space, and Maruti and Mahindra, and of course some of the other ancillaries in that space. Definitely my Swadeshi picks.
I repeat, viewers, this next 9 days, a lot of consumption stocks will move based on on-ground reports about what sales are looking like, every single brand specific. So if Mahindra brands are doing very well, you might well see Mahindra stock do well. Same for Maruti, same for Hyundai, same for some of the consumer durable or the retail stores as well. So next 9 days, very, very crucial for figuring out the sentiment for some of the consumption names, and keep that at the back of your mind. Actually, Parag Bhai, can I come in on that? We've seen a bit of a rally for some of these consumption names. There was a Voltas management meet on Friday, which my colleague Mahima put out the takeaways for, and they're talking about inventory being there, but demand looking robust for the festive season. What is your stance now that we've had a month and slightly over that to digest this GST news, and the stocks also have rallied a little bit?
Yeah, so basically I am continuing to hold Maruti in my portfolio. As I told you, Mahindra and Mahindra, although these are my favorite stocks ever, but I was compelled to book some profits because there was a huge rally. So even in auto components, I'll not take names because they are small cap names, but I'm booking my profits a little bit. So I would say that yes, so I am thinking of second order impact now. Everybody in this world knows that Q2 will be bad for financials. Margins, NIM compression in banks, of course, not in NBFCs, and asset quality also, because all high yielding unsecured like credit card, personal loans will show some stress, or microfinance, for example. But this will be the end of it.
Exactly.
Already I am seeing the data improving. So my view is that you are absolutely right. One should keep ears on the ground and do channel checks in this festive period that which brand is doing well. I think so Maruti is going to do very well. But I would say that, and that's why Maruti is still there in the portfolio, even after a rally. But I would say that I am thinking about now second order impact, because I feel that current valuations of financials will allow market participants to ignore weak Q2.
Okay.
Because H2 will be better.
Sure.
We want to welcome all of NDTV 24/7 viewers as well to our broadcast this morning. And we're talking about how markets will be opening in a short while from now. What we're showing you on your screens are the pre-open rates. This is the 8 minutes of trade that takes place before markets actually open, and you have larger investors that come in and put in their bids, so to speak. It's interesting because, and these are very fluctuating levels that you're seeing on the screen, so they will keep changing second by second. But the one theme that you're seeing very clearly this morning is those companies that have order wins are doing well. You have a PNC Infra, for example, about 3% up. You have a Garden Reach, and we've been talking to you since this morning about how shipping stocks will be in focus. The government has given shipping industry infrastructure status, and that is going to be in focus as well. You're going to see the consumption boost coming into play. But remember, when Prime Minister spoke on Sunday evening, he emphasized Swadeshi products. India Inc. now has a huge opportunity to boost that measure and actually bring in more Swadeshi products, reduce import dependence. Mahima is joining in now with a list of stocks and companies that are actually in that Make in India race and right up front. Mahima.
Right. So, what we've tried to do here is we've tried to divide it sector-wise as to where these companies are actually trying import substitution and what are these products or areas that they're trying to do import substitution in. The first one is medical devices, where around more than 80% of import dependence is there. But something like a Polymedicure is, trying to import products like the infusion therapy devices, cardiac catheters and blood transfusion equipments as well. In the industrial machinery segment also there is more than 80% dependence on imports. So companies like L&T, BHEL, Elecon Engineering, etc. are trying to be in that race of import substitution. For L&T, heavy machineries, infrastructure equipments. For BHEL, again power plant machinery is something that they are focusing on. For Elecon Engineering, industrial gears and material handling equipments is where we are going to see import substitution, which is already happening and going to happen going forward as well. For rare earth, more than again 80% dependence is there. So GMDC is a counter where one needs to look at where products like rare earth oxides, lignite, bauxite as well as fluorspar is being tapped into for import substitution. Hindustan Zinc is other counter one needs to keep an eye out on. Then in terms of semiconductor chips, now here large dependence when it comes to imports of these chips, but we have counters like Keynes Tech, Dixon Tech who are now planning into semiconductor assembly, testing, electronic manufacturing services to kind of substitute the dependence of import of semiconductor chips. Then in terms of solar cells, you have counters like Vari Energy, Adani Green, Tata Power, Premier Energies and Borosil Renewables. In terms of all of these counters, all of these companies, they are trying to tap into the solar PV module cells, inverters and focusing on scaling cell capacity as well and reducing China import dependence as well. So all of these companies are trying to find a solution in terms of where we are dependent on import and of course trying to find a substitution here on.
Got it. All right, Mahima, thanks so much for that. While we're speaking about the implications of the rollout of GST, which of course takes place today, we've seen a lot of the stocks that benefit from this likely consumption boost run up in the move to today. So you may not see too much of a reaction for the automotive companies or some of these FMCG names in trade today. What you're seeing today is the implication of the H1B announcement over the weekend. So pull up the IT companies and you've seen a bit of a reaction. Of course, this is still early minutes in today's trading session, but all of the constituents of the Nifty IT currently in the red, led by a cut of about 4.5% for Coforge. You have Persistent Systems that's down about 3.5% or so. HCL Tech also about 3%. TCS losing ground as well. So let's talk about this a little more. Ravi Menon, IT Services Analyst at Macquarie Capital, joining in. Ravi, thanks so much for taking the time. Your initial read on the implications, is there going to be a top-line impact? We spoke with Mr. C.P. Gurnani just a short while back. He says unlikely. Is there going to be a margin impact, and to what extent?
Well, so I don't believe there is going to be either a margin impact or a revenue impact. And the reason is actually this rule actually applies to all companies, right? It is indiscriminate. So theoretically, I mean, you can be, say, a small US supermarket chain looking to hire your first person, sponsor a visa, and you still have to pay this. So it doesn't matter whether you are Amazon or the supermarket chain or your TCS. I mean, you still have to pay the same amount. This is very unlike 2016, 2017, when there was talk about introducing a different wage level for companies which are deemed visa reliant, where if your current US workforce is more than 50% visa holders, then you would be subject to the minimum wage limit. That was talked about in 2016-17. And so that seemed to differentiate between, say, an Accenture or a Deloitte, which has a lot more local presence versus Indian IT services firms. This time, there isn't anything like that. So I think this just raises the wage level across for some specialty occupations. And at this rate, it's not a very material impact, right? I mean, you're looking at roughly like a $8, $8.50 billing rate increase per hour that's required to compensate for this amount, which I think is not a large amount, especially considering that you have an on-site offshore mix in most cases, right? So you're looking probably at like a 2-3% billing increase that's required. And I think since it's applicable to all, whether you as a client choose to even go and directly do the sponsorship, the same costs apply to you. So I think, there is really not going to be any impact.
Ravi, good morning, Neeraj here. And this is good to hear per se, but so we were wondering in the morning that 4 or 5 IT companies have given out statements that it's not as big an impact on them. You kind of reaffirming that, not just for a particular set of companies, that by and large, IT services EBITDA numbers won't get too majorly impacted.
Correct, Neeraj. Exactly. I mean, because I think in 2016 too, people had taken a rather simplistic approach and said, what if the wage level is taken to $125,000, or if the limit is 100,000? We are currently paying mostly 85 or something. I'm talking about 2016. Wage levels have significantly increased now. But so at that time, that was the kind of analysis that was done. Ignoring that, that the US is very heterogeneous as a country, you can't actually have the same wage level for Iowa and New York City. Right. So it's I think something similar is happening even now. People are looking at it and saying that, the margins that you make, it's actually going to be completely washed away by this $16,000 fee. But that will be passed on, and this is only part of the mix, right? The on-site offshore model is successful because only a very small part of the cost is actually on-site. You have a significant mix of offshore labor as well. And that's that's why I think it can be easily offset. I don't think this is anything negative, and I think it might actually even be a little bit of a positive because H1B visas are now become I'd say there is a shortage of that every year. You see this going into a lottery, and if you look at the filers, you have a long tail of filers. A lot of them are fly-by-night operators who just sponsor visas, for people with the bare minimum qualifications. I think that sort of thing will stop, and you would see more eligible candidates actually getting the visas.
In terms of the opportunity you spoke about, Ravi, just very quickly, which companies, if you see a dip today, this morning, sentimentally, which companies would you have on top of your list to pick up as an opportunity? Would you look at some of the mid-cap players? Would you look at the top 3?
And so, we've got TCS as a top pick in the large cap, followed by HCL, then LTI, Mindtree, and Wipro. And the mid caps are top picks as Persistent Systems, followed by LTTS.
Okay, LTI, Mindtree, TCS, and LTTS. All 3 of them on Ravi Menon's list. Thank you so much, Ravi, for speaking to us. And let's get to the brokerage call of this morning. BOFA, and Morgan Stanley has initiated a buy on Knowledge REIT. Sumit joins in with more details.
Well, there's a couple of bullish notes that have come in on this Knowledge Realty Trust. Bank of America has initiated buy rating with a target price of 119. They say that Knowledge REIT is India's most diversified and largest office real estate investment trust. They believe that there are multiple positive tailwinds for the company. They also say that the leasing environment and policies are quite favorable for REIT. And over the next 3 years, they're expecting the company's operating income to grow at a CAGR of nearly 14%. And the dividend yield to be around 6.4% in FY27 and 7% in FY28. When it comes to Morgan Stanley, they have initiated overweight rating with a target price of 122. They say that Knowledge REIT offers a defensive profile with steadily rising cash flows and an acquisition upside potential as well. They believe that strong GCC-led office demand and scale with highest tax-free yield will benefit Knowledge REIT the most among all the listed real estate investment trusts that we currently see. It also says that Knowledge REIT stands out for its geographic diversification and highest mark-to-market upside potential. They also say that the company has the lowest special economic zone area and highest tax-free dividend component among the listed real estate investment trusts currently. Now, the brokerage is expecting the company's operating income to grow at 24% in FY26, and they are looking the dividend yield to be around 6.2%.
Okay, thank you for that. I just want to look at some of the pre-open rates when it comes to IT stocks specifically. IT is going to be in focus, and two stories that are big today. One side you have this impact on IT companies, the other side you have this consumption boost. So let's see how that's panning out. Nearly 4% down after the pre-open session has ended. And remember, markets will open in less than 2 minutes when you will see the actual rates coming in where everyone can come in and buy or sell. 2.5% yearly down on TCS, Coforge, Emphasis, Persistent, all of these companies, HCL Tech, seeing some amount of pain. Parag, is this the time to actually go out and pick up some stakes in IT companies?
Absolutely. Absolutely. If it is opening like say more than 3% for Infosys, or some other names which are opening, large cap names opening more than 3.5% down, I think one should, if you have an underweight position, then you can definitely increase the position, and if you are a normal investor also, from long term perspective, it makes sense to buy today.
What is interesting, I think, is beyond IT, and maybe Kush, you can come in on this, just about 0.4% or 0.33% of a cut for the benchmark Nifty 50. Of course, the IT index indicating that downtick of about 3%. That indicates that beyond IT, there is relative strength. Would you agree?
Excellent point, Alex. In fact, that's exactly what I was noticing. Look at Bank Nifty. It's about 30 points down, which is practically nothing, a flat opening. So I think beyond this, the sentiment is largely positive. I think you're going to see some recovery after this kind of a gap down opening as well. So I remain constructive on the markets today.
Kush, buying the dip in IT, very quickly, 20 seconds.
Yes, absolutely. And the stocks to focus on are Emphasis and Coforge.
Okay, Kush Bora saying that the stocks to focus on are Emphasis and Coforge. He hasn't given the levels at which he'll buy, but we'll save that question for when the market opens and ask him pinpoint, is he buying them at that point of time or no? 15 seconds left for the markets to kickstart trade. Keep in mind, the IT will start off lower, may see some buying from the lower levels. Viewers across the network, this is the big thing. Navratri starting. The festive cheer starting. Let's see if it shows in the markets. It is a start in the red with banks not doing too badly. This is the index which represents all the banking stocks, and it is flat. But Nifty IT is starting off with a 3% cut. This is due to the H1B visa regulation change that the US administration ushered in Friday late evening, Saturday morning. And no surprise that they're starting off lower. I would have thought that the behavior would have been a bit better, but no, there is a gash and you have to accept it. Mid caps, 0.25% lower. Small caps will come up on your screen next. The index which represents the small cap stocks, 0.16% lower. Not too bad. The Sensex, which comprises mainly of the large caps, is down 0.5% because of IT. A lot of IT stocks, nearly 6 stocks in the Sensex currently. Let's get the Nifty 50 stocks on the screen and see what is moving and what is not. So as you can see at the bottom end, which represents the worst performing stocks this morning, it is IT all across. Tech Mahindra, which BofA Securities says was the most exposed, down 6%. Infi, Wipro, TCS, HCL Tech, all of them down in the red. Then there is an Apollo Hospitals, Bharti, Tata Motors, but few and far in between. But even when the index is down about 1/3%, even Stevens on the red and the green, which is a good thing. Just very quickly marking the winners. HDFC Life, 1.3%. Adani Enterprises, which went up 5% in Friday's session. And Jefferies has a positive note on it with a higher target price of 3,000, is up 1.4%. SBI Life, Eternal, Bajaj Finance are some of the other names doing well. So viewers, on the large caps, the verdict is that it is IT which is dragging the index lower. Otherwise, it is not too bad.
Adani Ent is seeing that big push because of Jeffries being very bullish on the airport opening, the Navi Mumbai airport, which will open soon, and that's why you're seeing Adani Enterprises doing this. So, okay, this is the top 50 stocks on the Nifty that we're talking about, but let's move broader and wider and just give you a sense of what's happening in the broader markets. The Nifty Mid-Cap 150, which is the top mid-cap stocks, is also down nearly 0.5%. It's a dull morning. It's a dull Monday morning, and it shouldn't be coming as a surprise to anyone because we are under attack on various aspects. You have two union ministers in the United States right now. You have the Trump administration attacking H1B visas. There's a Louisiana senator who suddenly gets up and says that we should not import shrimp from India. So there is all of that brewing in the backdrop. I want to pull up the India VIX. The volatility index is a good gauge to see how worried the market is, to put it simply, and that is spiked up 5%. So that up in the green is actually telling you that the worry is spiking and the volatility that they're expecting is spiking. So that's not a very good sign, and it's actually explaining in a sense what you're seeing on the rest of the screen. Let's pull up the sectoral heat map and we'll give you a sense of how sectors are doing today. You have Nifty IT, no surprises there, about 3.5% down. Whatever these companies say, whatever all the brokerage notes say, the fact is that H1B visas have been hit. Is it just the first step that America is taking, or the Trump administration is taking, to target Indian IT companies? Perhaps is a question in the mind of investors today, because if you remove the Nifty IT out of the picture, there's a lot of red in the screen, but it's not such a huge hit. The Nifty Mid-Cap Select, for example, just about 0.5% down. What's working this morning? India Defense. This is going to become a Swadeshi moment, not just for consumers who are going to go out and buy today as Navratri starts and the GST rollout starts of lower rates. It's also going to become a Swadeshi movement, maybe in terms of stocks. Look at India Defense, about 1% up. I wonder if we can pull up the components of the Nifty India Defense just quickly and see how many shipping stocks are there. Yes, you have Garden Reach, Cochin Shipyard, Mazgaon. Now, these are all companies that build ships and have been recently, just over the weekend, given infrastructure status. That's why you're seeing them up in the green, especially Garden Reach. This was all on our watch list this morning, so if you tuned into NDTV Profit this morning, you would have been well prepared. Let me talk about specific stocks as well as we move forward. PNC Infra has received a 450 odd crore order win. And this was on our watch list, about 3% up this morning on what is a difficult morning. We'll just recap some of the IT names as well and the mid-cap IT names. Look at what's happening there. Coforge and HCL Tech quite hit badly. Coforge coming out and saying we just applied for 65 H1B visas, but the street still looking at this as a pain point. Emphasis about 4% down as well. Infosys, Wipro, Birla Soft are some of the other ones that we're looking at. Remember, our analysts in our studios this morning are saying that if you see this kind of a hit on stocks, it might be an opportunity to buy. Persistent seems worse hit, about 4% down at this point. Let's look at shipbuilders as well. We saw some of them there. Let's add a Swan Defense to that list. SCI, about 5% down. Cochin Shipyard, Swan Defense, 5% up. Sorry, all are Swan Defense possibly on an upper circuit. It has a huge order win as well. NetWeb is the other company that we've been tracking. They've got a 450 crore order to make AI GPUs. This is one of the few AI plays that we have in the listed space in India, and that is looking good this morning, 5% up. So yes, there are some winners, but the overall mood very cautious this morning, Alex.
Yeah, you said it, Tamanna. In fact, you've already kind of highlighted, so did Neeraj, but I want to drive home the point, right? So you have a cut of about 75 points, for 73 points or thereabouts for the Nifty 50. All of that being contributed, you can argue, by the IT sector, because as I look at the screen and I look at the sectoral contribution on the Nifty 50, 72.35 points at this point, when I'm looking at the screen, is just the Nifty IT, just IT rather, in that bucket, because there are so many listed companies, large ones at that. Infi, TCS, Tech Mahindra, HCL Tech, all of them in that list. But take a look at a few more stocks from the broader markets, and some of the shipbuilders were pointed out, but there's also Shipping Corporation of India that's up and about. I think Neeraj spoke about it before the start of trade. It's up about 5.6%. The update, of course, is that it signed an MOU with BP, HP and IOC to jointly acquire, own, operate and manage vessels. Anantraj is up and about, up about 5% or so. You have Adani Green that's up about 2.7%. Hind Copper also buzzing in trade up close to 3%. Among the losers beyond the IT, and it's actually, I have to look down the list quite far to find stocks outside of the IT pack that are doing badly this morning. You have Ipca Lab that is losing about 3.3%, Dr. Lal Path, which is down about 2.8%, 2.7% or thereabouts. But I want to ask Kush about some of these stocks, right? Kush, you've seen the open down about 0.25% for the benchmark Nifty 50 beyond IT. Would you say that there are a few opportunities maybe in the healthcare space, in pharma, or beyond that? Anything that you're seeing that could be bought? Or would you just buy the IT companies looking for a pop?
So if your view is positional, and by that I mean a month or maybe 3, then this is a good time to buy IT names. Let me start with the positive first. Remember how we spoke that the dip could be a buying opportunity. At one point in time, Nifty was actually more than 100 points down, and you've seen that recovery with Nifty now just being about 68 points lower. In fact, Bank Nifty had just turned to green, flat now, but even that had turned to green. So this is suggesting that there is still inherent strength in the market. It's just the heavyweight IT sector, which is down today, that's dragging the markets a little lower. So I would still reiterate the calls that we discussed before the start of the show, which is Canara Bank. Look at that move. What a fantastic recovery, and holding and gaining ground. Sequent Scientific also doing the same. And the two names that we discussed, from the IT space, Mphasis and Coforge. Now, while on the face of it, it might look like, these stocks are down 3.5%. It's not such a bad thing if you consider the recovery. Mphasis actually went and hit a low of 28.17, and it's recovered almost about 70-80 rupees from there on. So that recovery that we spoke of is underway. So if you have a positional view, you should look at IT names, and by that I mean anywhere from 1 to 3 months or more. This would be a good time to buy IT names. And if you want to look at a very near-term trade, I think you should still look at financials. Canara Bank being one of our top picks in that segment.
One stock that has worked beautifully and something that was discussed here on this very table is Piramal Enterprises. It's up 1.5% today as well. And remember, it's ahead of a big event, but at 2.5% in fact, because I think it stops trading because there's a subsidiary share that comes into offering as well. But I think we discussed this at what, 950 or thereabouts?
1067.
1067, is it? Wow, you have the price known as well. Now it's 1149, 100-point uptick, but there is an event, Parag. I just explain what happens. Should people still log on to Piramal Enterprises? I can't ask Kush because it will stop trading tomorrow, right? So I have to ask a fundamental view.
Sure. So basically, I would definitely love to hold on, because I know for sure that, see, Q1 PAT, as I told you last time, was already 275 crore. So this year, they will do 1300 to 1500 crore PAT. That is what they have said in their presentation. And market cap today also, after this rally, is also around 26,000 crores, which is still below book value. So I would say that I would not mind holding it for 1 month, because I feel that from every quarter, you will see improved earnings. Because their productivity gains are phenomenal. They have 516 branches, and the productivity gain itself is going to give them a big fillip. Plus fee income growth, and plus, of course, the cost of fund will come down for all NBFCs, as the banks will pass on the rate cuts. So I would say that I would repeat what I said on that day, that the loan book is going to grow at 30%, and your ROA is going to actually 1.5 from 1.5% now to 2.5 or 3% by FY28, which will cause a significant earning improvement. Of course, one big caveat is economy has to hold on, which I feel that from second half economy will only recover, and so that helps my thesis.
Got it. Parag bhai, on that note, thanks so much as always for taking the time. Kush, as always, thanks so much for joining us in studio.